Goldman Sachs really delivering on its traditional areas of strength, trading and investment banking. Investment banking revenue rose 43% year over year. Advisory revenue rose 60% year over year. And underwriting rose 21% for equities and up 30% for debt. Now, when you look at trading overall, there's a bit of a wrinkle when you break it down into asset classes. For FIC, fixed income, currencies and commodities, that rose 17% to $3.47 billion, handily beating the average analyst estimate. But the equities trading rose 7%, and that missed the consensus estimate by about $200 million, $3.74 billion reported for the quarter. Goldman also set aside less money for bad loans for the quarter, setting aside $339 million versus the consensus estimate of almost $370 million. In addition, for these big banks, their biggest expense is compensation. And operating expenses did increase 14% year over year, more than anticipated. Compensation expenses rose by the same amount, 14%, more than anticipated as well. One thing to keep in mind with Goldman, of course, is that it is the most exposed big bank to investment banking revenue. So it'll have the fastest response among all these different firms that we track to recession risks or any kind of erosion or deterioration in market conditions. But for now, this looks like a solid number, especially on the investment banking side.